when gold is that close to its high, and now here we are within 2.5% of a record high, very good chance gold will make a new all-time record high in dollars next week. If not next week, maybe the following week. Yet these gold stocks have a long way to go now to recover, not just from a correction, but they had an entire bear market. That's how worried, that's how much fear there is in this market. There's no confidence in it, which is one of the reasons that you should be so confident. Where other people are fearful, that's where you can be brave. And when other people throw caution to the wind, like in the overall market or like in Bitcoin, that's where you need to be fearful.
I think it's Senator Loomis from Wyoming who came up and said that her idea is to revalue the gold held by the Federal Reserve on behalf of the Treasury to a level high enough to purchase Bitcoin with some of the proceeds. You can't make it up as well in that all of the central bank balance sheets that hold gold have it in an account called the gold revaluation account. It's the name of it. The head of the Dutch National Bank has talked about this for quite some time, revaluing the price of gold. In a world where Bitcoin can be $100,000, no big deal, why couldn't gold be revalued to $130,000 and thereby render our $36 trillion debt solvent?
The fact that gold has had the best year between conferences since I can remember. I remember at the last conference, there was a lot of discussion about whether or not gold would make it above 2,000. I was one of the people there that thought that it would. Of course, I wasn't the only one. It was a gold conference, so there were people that thought gold would make it above 2,000, but it was below 2,000. And between that last conference and this one, we've had this explosive rally. You would think, there'd be a lot more excitement, a lot more enthusiasm, but not really. I mean, I really couldn't tell much of a difference between the environment this year and the environment last year. I mean, there's just not a lot of excitement yet in the gold market, despite the fact that gold actually rose almost 4% on the week. It closed at 2,715. So back above 2,700, we're only about $35 below where we were when Trump surprised the markets, or maybe not surprised them, but Trump won, and that inspired a big rally in the dollar and a decline in gold. Well, gold has almost recovered all of that. In fact, if you look at its record high from a couple of weeks earlier, we're only about 2.5% below the all-time record high for the price of gold. And if you measure gold in euros or in British pounds, as a lot of people obviously do, because there's a lot of people that live in Europe or the UK, gold closed at an all-time record high in those currencies. And remember, gold was making all-time record highs in foreign currencies before it eventually started making all-time highs in the dollar as well. And I expect that to be the case. It's just lagging a bit due to the strength of the dollar. In fact, the dollar closed the week at about a 3-year high, I think, in the dollar index. It closed at 107.5. The euro is barely holding on to a 104 handle. It got to as high as 112 not too long ago. And the entire rally in the euro is based on Trump winning. Now, I know we got some weak economic data coming out of the Eurozone last week, especially on Friday. The PMIs that came out were particularly weak, but the U.S. PMIs have been weak too. And so I don't think it's really the weakness in Europe. It's the expected strength in the United States that traders believe will be in sharp contrast to what's going on in Europe, because we've got Donald Trump and people assume we're going to have a stronger economy. We're going to have faster GDP growth. Maybe he's going to shrink the deficits. We're going to have a stronger dollar. In fact, people think that tariffs are going to lead to a stronger dollar. I disagree, but that's what the markets perceive. So you're getting this strong dollar. But I think the markets are also overlooking a big factor, because the currency markets, I think, were still trading before Trump won under the false narrative that we had a strong U.S. economy, that we had the strong labor market. And that was part of what was underpinning this dollar, because there was a perception that the U.S. economy was in better shape than the rest of the world. And so the Fed would not cut as aggressively as maybe the ECB or the Bank of England or other central banks. But that was a false narrative. The fact that Donald Trump was elected in and of itself strongly suggests that that was a false narrative. Because if the economy was as good as the markets believed, Trump wouldn't have won. They would have elected Kamala Harris. The fact that they voted for Trump is an indication that the voters were not happy. The number one issue in the campaign was the economy.
Good evening, and welcome to Economy Express, your go-to source for financial insights and economic trends. Tonight, we dive into a riveting analysis by renowned economist Peter Schiff, who's making bold predictions about the future of gold, silver, and Bitcoin. Schiff, known for his sharp critiques of speculative markets and his unwavering support for tangible assets, shared insights that every investor should hear. Let's begin with the headline-grabbing topic: gold is on the brink of a historic breakthrough. After a turbulent year, gold prices have surged, closing the week at $2,715 per ounce, a mere 2.5% below its all-time high. Schiff predicts that gold could break its record in US dollars as early as next week. Meanwhile, in global currencies like the euro and British pound, gold has already set new record highs. The driving forces? A combination of geopolitical risks, economic uncertainty, and what Schiff describes as a misplaced faith in fiat currencies. Now, it's not just the price of gold that's catching attention. Schiff highlights the undervaluation of gold stocks, which have yet to recover fully from a bear market that left them deeply discounted. While gold itself has seen nearly a 4% weekly gain, major indexes like the GDX and GDXJ, representing larger and mid-sized gold companies, remain 13% to 14% below their recent highs. Schiff sees this as an opportunity for brave investors, urging them to act while others remain fearful. Shifting to silver, the often overlooked sibling of gold, Schiff points to its unique potential. While silver hasn't rallied as dramatically as gold, its critical role in industrial applications like electric vehicles and renewable energy positions it as a sleeper hit in the metals market. Investors, he argues, should not underestimate silver's capacity for explosive growth. But Schiff doesn't stop at precious metals. He delivers a scathing critique of Bitcoin and the broader cryptocurrency market. He warns of speculative euphoria that has driven Bitcoin to unsustainable levels, fueled by what he calls reckless lobbying within the U.S. government. Schiff reveals shocking details about proposed legislation advocating for a Bitcoin reserve funded by the sale of U.S. gold, an idea he labels as near treasonous. He cautions investors to steer clear of cryptocurrencies, describing them as digital fool's gold compared to the enduring value of physical metals. Zooming out to the broader economic picture, Schiff notes that while the US dollar remains strong, its position is precarious. The dollar index closed at a three-year high of 107.85, bolstered by expectations of stronger U.S. economic performance under Donald Trump's administration. However, Schiff argues this optimism is misguided, rooted in a false narrative of economic strength. He reminds us that Trump's election itself reflects voter dissatisfaction with the economy, a sentiment that could upend market expectations. Adding to the complexity, global gold trade dynamics are shifting. Swiss gold exports to the UK soared in October, marking the highest level since mid-2021, as London solidifies its role as a major bullion trading hub. However, high gold prices have dampened demand in China, the world's top gold consumer, highlighting the balancing act between price and physical demand. So, what's the bottom line for investors? Schiff urges a strategic approach, embrace precious metals when fear dominates the market and avoid the siren song of speculative bubbles like Bitcoin. Gold and silver, he asserts, remain the ultimate safe havens in times of economic uncertainty, offering tangible value in a world awash with digital illusions. As we wrap up tonight's coverage, a question lingers: are you prepared for what lies ahead? The next few weeks could mark a historic turning point for gold and silver. Will you seize the opportunity or let it pass you by? That's for you to decide.
Welcome to Economy Express, your go-to destination for all things economics and finance. Whether you're an experienced investor, an inquisitive student, or just someone who wants to stay ahead in today's ever-changing economic landscape, you've come to the right place. Now, let's get into the details of our news.
Through bizarro world for the last 4 years on many levels. And I think people are tired of bizarro world and they're tired of a country that favors lifestyle over merit and hard work, that favors equality over equal opportunity. And I think we're sick and tired of watching our country and the things that made this country enviable to most of the world, our culture, be whitewashed right out from underneath us. The judicial system, the electoral system, the immigration system, the lawlessness, the wokeness. And it's a breath of fresh air. And I think that has also translated into the risk on trade where, there's no reason to be defensive anymore. It's hope springs eternal, but that's misguided. And I think that's exactly what the bullion banks were counting on and hoping for. And use that opportunity to indeed flush out, the weak-handed money managers that drop the price down below the levels that trigger selling and selling and selling and selling, and they're covering. But to Craig's point, the debt, that's not going anywhere. In fact, it's obviously will probably get worse in a weaker dollar environment with low rates and a weak dollar. That's hugely inflationary. Inflation is coming. The loss of purchasing power is coming. And really what this translates into, which is somewhat concerning for a lot of the country, is again, like the Cantillon effect, the wealthy will get wealthier as their assets go higher in price, which ultimately will translate into price inflation as that trickles down into the economy. We've seen this playbook over and over and over again. And pivoting away from inflation or fighting inflation when they're 65% away from their target, when Trump is inheriting an economy where the numbers that he supposedly, or the book, the economics that he is inheriting are far from what we're being told. I mean, inflation is much higher than the 3.5% and that we're being told. Unemployment is much higher than the numbers that we're being told. The economy is in much worse shape. With what we saw happen in Lindsay, Oklahoma a few weeks ago, I find to be a kind of a red flag. And the fact that it's gotten virtually no attention whatsoever by the mainstream is absolutely crazy to me. And, Powell's talked about bank consolidations. I think the banks are massively over leveraged and undercapitalized, and watching rates on the back end go higher only hurts them more. But when the bank in Lindsay, Oklahoma failed, 50% of the uninsured deposits, they're gone. Boom, vanished. When Silicon Valley Bank failed and Signature Bank, they were all bailed out. Hundreds and hundreds and hundreds of millions of dollars. Oprah's money, Oprah Winfrey's money, the tech startup money, bailed out. This little podunk bank in Lindsay, Oklahoma fails, and only 7 million in uninsured deposits, only 50% are returned. The other 50%, I would argue, is the first bail-in this country's ever experienced since the legislation was written, and there's not a word of it on the mainstream. And I guess if I were going to play devil's advocate in all of this irrational exuberance, and I think some of it's justified, I do. I think it's time to be optimistic for getting our culture back, getting our country back. That's a good place to start. The financial side of things, we're a long way from fixing that. But if I were to throw out one concern, it's that if there really is a deep state, if things really are planned, my biggest concern is they're setting up for a fall. That you look at the BTFP, the Bank Term Funding Program, it's over. You look at the reverse repo market, it's almost down to zero. The liquidity is being yanked from the system right at a time when the banks are massively over leveraged and undercapitalized, and we should expect to see long-term rates continue to move higher. That's an unresolved problem. And so while I am very optimistic, and I think it is very optimistic ultimately in an inflationary world to expect metals to do well, at some point after this sell-off commences and or finishes. I just think that it's also justifiable to be cautiously optimistic.
Tonight, we turn our attention to an intriguing analysis by Andy Steckman, president of Miles Franklin, who presents a bold vision of how gold and silver could reshape the global financial landscape forever. Let's begin with a stunning proposition, a revaluation of gold to levels never before seen. Steckman discusses the potential for the United States to revalue its gold reserves to an astounding $130,000 per ounce as a way to address the nation's unsustainable $36 trillion debt. Drawing parallels to President Franklin D. Roosevelt's revaluation in 1934, Steckman highlights how this historical precedent could be revisited in today's environment of economic uncertainty. This revaluation could render the U.S. debt manageable while profoundly altering the role of gold in global markets. Steckman also sheds light on the rising influence of central banks in the gold market. He explains how central banks utilize tools like gold revaluation accounts to stabilize their economies during crises. This mechanism allows central banks to counterbalance debt and leverage their gold reserves in times of financial distress. With growing gold accumulation among central banks, particularly in the BRICS nations, the stage is set for a seismic shift in how gold is valued and utilized worldwide. Turning to the broader economic picture, Steckman issues a stark warning. Inflation is on the rise, the US dollar is losing ground, and foreign investors are pulling back from US treasuries. These trends, he argues, signal a weakening financial system that could lead to a major economic crisis. He points out that the U.S. debt to GDP ratio now exceeds 120%, a level historically associated with economic instability.
That Rob went to in Tennessee when Trump spoke, it's interesting, directly following Trump was the senator from Wyoming. And her last name escapes me at the moment. Loomis, I believe. I think it's Senator Loomis from Wyoming, who came up and said that her idea is to revalue the gold held by the Federal Reserve on behalf of the Treasury to a level high enough to purchase Bitcoin with some of the proceeds. You can't make it up as well, in that all of the central bank balance sheets that hold gold have it in an account called the gold revaluation account. It's the name of it. The head of the Dutch National Bank has talked about this for quite some time, revaluing the price of gold. And, when you look at the amount of gold that has been accumulated throughout all of Europe and throughout the BRICS nations, it would certainly benefit the central banks. It would behoove all of them. Over my shoulder, you got Roosevelt there. In essence, that's what he did. When he confiscated gold in 1933, he devalued the dollar by 40%, thereby revaluing the price of gold by 40%. It's something that is being noticed. When you see a senator from Wyoming actually say that she wants to float a bill to do that, it is being noticed. You got Jim Rickards saying $27,000 an ounce gold by dividing the gold supposedly held at Fort Knox by M1. You got others that say other things. In a world where Bitcoin can be $100,000, no big deal, why couldn't gold be revalued to $130,000 and thereby render our $36 trillion debt solvent, offset with the amount of gold that would more or less make that a wash? I guess it could. In theory, the Treasury says any country that wants to deliver their gold to the U.S. Treasury will pay them $130,000 an ounce. Okay. Isn't that what the price is? Yes, it's inflationary. Yes, it's going to have ramifications. But when you realize that we are entering that period of time, Rob alluded to the fact we're insolvent, approaching, I think we're at 120% or so of debt to GDP. Where I come from, those countries way back when, anything over 100% debt to GDP were considered banana republics. And those were usually the countries that had questions surrounding their electoral process, their judicial system, all of the things that have plagued this country. I mean, you could argue we have been toting the banana republic line for quite some time. To me, the common thread in all of it is a marriage between blockchain technology and gold and a new system. and to peg a new system that has lost all credibility to something that inspires credibility. Yes, I see it. It's right here on the blockchain. It's audited independently, continuously, and it's pegged to and backed by gold. The only way you make that work, and that it's interesting, you know, the Swiss had a 40% gold backing way back when. That's the number that the BRICS nations have said in theory they chose. And I think that is something that would work. You put gold at a much, much higher level. You peg it to gold, put 40% gold backing or whatever it is, still gives you monetary latitude and then credit.
With interest payments on the national debt projected to consume up to 50% of federal tax revenues by the 2030s, the government's ability to fund essential programs like Social Security and Medicare is under serious threat. For investors, Stegman provides critical advice. He stresses the importance of holding gold and silver as safe haven assets, particularly in this inflationary environment. While he acknowledges recent declines in precious metals prices, he attributes these to manipulation by large hedge funds and commercial banks, who are working to suppress prices and accumulate gold and silver at lower costs. Stegman believes these manipulations are temporary, as central banks approach a tipping point where they'll revalue their gold reserves, leading to explosive price movements. Finally, Stegman critiques a controversial legislative proposal to sell U.S. gold reserves and purchase Bitcoin. He warns that such measures, if implemented, would be reckless and destabilizing. Instead, he advocates for pairing blockchain technology with a gold-backed system to restore trust and stability to the global financial system. In conclusion, Andy Stegman paints a compelling, albeit cautionary, picture of the future. While he remains optimistic about the potential for economic recovery, he urges caution and preparation. The financial system, as we know it, is poised for significant changes, and gold and silver could emerge as the pillars of a new economic order. So, what does this mean for you, the investor? Are you ready to navigate this potential transformation? The time to act is now. Thank you for joining us tonight on Economy Express. Stay informed, stay prepared, and as always, keep your investments grounded in solid insights. Good night! E.